Hey everybody, what's up? Monday afternoon. Whoa, big day today. S&P closed at a new record high. The Dow did not, and the NASDAQ did not, although NASDAQ is close. All right, so I saw some interesting things today. I spoke earlier today about why I am selling into this rally. Actually, some cool headlines. I saw another one today where some analyst said the worst thing investors can do right now, they were giving advice, right? It was a blaring headline. The worst thing investors can do right now is to take profits. And I just looked at this and I thought, man, look how far we have come. Last year, all of last year, really, and even going back to the end of 2018, remember that? I mean, I've talked about that so many times. We had that big market correction, people panic, people freaking out, trade war, inverted yield curve. I was saying at the time, that is a buying opportunity. Why? Why was I saying that? Just for no reason at all? Am I a perma bull or whatever? No, I was saying at the time, and you could go back and you could watch my videos, and I said, look, things are getting better. Bank credit expanding, loans and leases expanding, fuel demand going up, job creation going up, wages. I also talked about tax deposits coming into the federal government, reversing from down year over year to sharply up year over year. Like all of these indications that the economy was not just getting better, it was re-accelerating from a slow patch. People were selling. The other day in a video, I talked about when there is a deviation in the market from underlying conditions. Everybody should be looking out for that, because when that happens, you know what? That creates opportunity. And all last year in 2019, everybody was screaming about, right, the trade war and the inverted yield. The inverted yield curve was huge. I mean, that was in the beginning, the first quarter of the year. They were all saying that is absolutely a predictor of a recession. I mean, it has never failed us, right? Now all of a sudden, there's not going to be any recession. In fact, Goldman Sachs said the economy is immune to a recession. So man, I mean, what a turnaround, right? But again, it's not all about sentiment. Sentiment's important. Sentiment may be at times a good sort of a timing device, if you will, but it's really about underlying conditions. Look, sentiment can stay fixed, bullish or bearish for long periods of time if the underlying conditions support that particular sentiment. But I'm saying now that we are seeing developments in the economy which suggest weakness for the first time. You know, I've been talking about how this market has been bullish and how the economy and economic conditions have been bullish for a long time. But again, let's go over it. The slowdown in bank credit, the slowdown in loans and leases, the very, very acute slowdown in commercial and industrial loans. I mean, now almost zero growth. And it has happened very quickly. I mean, in September, commercial and industrial loans were growing at 7% annually. Now, 0.6%. And by the way, if you go back and you look at C&I loans, when that has happened in the past, it has often preceded economic downturns. I'm not saying it's going to happen this time, but there is a very strong correlation there. Now, what's different this time is we have historic levels of fiscal support. So you can't ignore that. That's very important. But there are things, and look, the job market, weekly unemployment claims, the 4-week average at a 2-year high. Continuing claims for unemployment insurance at an 18-month high. Gasoline demand at a 2-year low. Distillate demand broke a 4-year uptrend. Product supply in petroleum, very, very ample. What else? There's things developing now which point to weakness. Now, maybe that's going to be short term. You know, the fiscal could pull everything through. But it's like each day we're getting a little bit more of those indications becoming apparent, as opposed to them kind of popping up and then going away. And then you look at that against the backdrop of the stock market just going up every single day, and it's another one of these deviations from underlying conditions that create opportunity. All right. So yeah, that's where we are right now, and pretty interesting environment. I would say it is 180 degrees opposite from what we saw, you know, back in late 2018, or even before then, when conditions were not just bullish but ramping up. So let's see what happens. Anyway, get my report. Go to pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader, and read all about it. Bye.